Welcome to Fintech Chatter, presented by Tier 1 People, leaders in fintech executive search. Follow us on your favorite podcast player or Fintech Chatter TV on YouTube.
Hello and welcome to Fintech Chatter, the show for everything fintech down under. I'm your host, Dexter Cousins, and today I'm joined by two really special guests, Sebastian Watkins and David Hyman from Lendi Group. Bas, David, welcome to Fintech Chatter.
Thank you for having us.
Yeah, thanks, Dex. Great to be here.
David, this isn't your first time. I think this is the third time you've been on the show, but it's your debut, Bas. But I've seen you on TV so much, you'll be an absolute natural.
More at home on the couch.
You'll be ducking into my seat and asking the questions.
It was Dave went away for 3 weeks and it was meant to just be a little bit of leave cover, but he seems to have passed the baton over on that one.
Oh, you're doing just a fantastic job. I think you're a natural. Well, if this fintech thing ever doesn't work out, you know where to go.
Full time on the couch with Carl.
Yeah.
No, I say special, and the reason why this is a special recording for me is having been around the fintech scene since 2013, which was coincidentally the birth of Lendi as well. It's just been incredible to watch the journey. So first of all, it's great to have you on the show from that reason, but also we get so much feedback from people that now, 3 years, 4 years into the show, this has become almost like an archive for Australian fintech and how not to do things. So it's going to be fantastic to get your insights. But before we go into all of that, if anybody isn't aware of Lendi Group, can you perhaps tell us a little bit about who you are and what you do?
Yeah, sure. So Lendi Group comprises 3 brands. We have the Lendi brand, the Aussie brand, and the Domain brand. And what we are is mortgage brokers. We're effectively the 5th largest retail distributor of mortgages behind the big 4 banks. And each of our brands has a different proposition, but ultimately it's a digitally led experience for our consumers, and we're a product-led sales.
And who are your customers, David?
We're really representative of the Australian market. So we've got, as Bas was saying, we've got really principally 2 brands, Lendi and Aussie Home Loans. They both somewhat target slightly different customers. So Lendi's, acquisition channels are, purely online acquisition channels. We obviously do a bunch of TV sponsorships, all that sort of stuff. But when we look at our distribution of customers, it's very much representative of the Australian population. There is a misnomer. It's not just millennials. We represent really, really well in the sort of 40 to 50 age group. And I think, by volume, if we sort of look at both the Lendi and Aussie brands, we're 6 coming up on 7% of the entire mortgage market. So you get a really good distribution across that in terms of purchase transactions, refinance, construction, et cetera. Basically anything that you can think about in Australia as it relates to home loans, we play in that space.
So to put that percentage into context, that would be the biggest outside of the big 4 banks in Australia?
Yeah, the closest big 4 bank to us would be about 11% market share. So we're not there yet, but we're hot on their heels.
Fantastic. So in terms of the size of the business now, how big is Lendi in terms of people, revenue, those types of figures that we all get excited about in fintech?
Look, on the people side, we've been really fortunate to have grown a really solid team over the last decade. So as you said before, Lendi started in 2013. We've got around 1,000 employees in the business. And that's everything from, we're a distributed workforce around Australia and the Philippines principally. We've got head office in Sydney, offices in every major capital city, and also a big operations centre in Makati in the Philippines. In addition to that, and as Bas was describing before, we've got across all of our brands, we've got roughly 1,400 brokers operating in the Aussie brand, circa 230 stores around Australia as well. So from a people perspective, it's a reasonably large operation. By the numbers, I talked about the market share before. We settle well over $30 billion worth of loans every year. We've got about $100 billion loan book and revenues in the hundreds of millions of dollars.
Wow. Looking back at the this kind of last decade, I want actually go before that. And one of the things that really strikes me about Australia, being a Brit and a adopted Aussie, is that there seems to be such a strong kind of entrepreneurial spirit in the DNA of this nation. How did you both kind of become entrepreneurs?
That's a great question. Dave and I both worked at the same company together outside of first job, sort of out of uni. It was a large sort of distributed sales / BPO type business. It had a number of blue chip clients in Australia, and we sort of, I think we both landed there out of uni thinking this was our stopgap towards finding our careers. I think Dave was wanting to go into investment banking, and I thought I'd be a property developer out of uni. So neither of those
didn't quite work out, did it?
So look, we both, I think, both knew people there. It was a good way to make some money while you were sort of looking for that first foot in the door in your long-term career trajectory. So we met there and both, were quite successful and were awarded with relatively sort of senior roles relatively quickly, and we're lucky enough to learn a lot about that business and the ins and outs of growing teams and managing teams. And we got to the point in our early 20s where we both sort of said, well, we should probably be doing this for ourselves. So I think 22, 23, we left that job and we borrowed $75,000 off our parents each. We were able to go and secure a contract with one of the large telcos, and we set up our first business in Surrey Hills, recruited 10 or 15 staff. Probably would have been an OH&S nightmare if I'm being honest.
I think we were sitting on the boxes that the chairs came in for the first couple of months.
This is bootstrapping, right? Yeah. So we said, well, we can't afford the luxury of a chair just yet, but we gave our staff the chairs and we had the boxes that the chairs came in, and that was our chair for the first month.
I think we managed to convince the landlord at the time. It was a commercial terrace in Surrey Hills, and we convinced the landlord at the time, I think, to let us pay the bond over instalments for the first few months.
Now that's a fintech idea, right?
Yeah, exactly. But I think even before that, I know one of the things we originally connected over was the business we met in had a very entrepreneurial spirit. But I think Bass had just moved to Sydney, and one of the things we first connected over was just that innate entrepreneurial drive that I think you're referring to. I grew up in a reasonably sort of middle class family. Both parents were small business owners, and kind of always saw that my parents wouldn't describe it like this, but that hustle that small business owners have. I remember, you were talking about your T-shirt business when you were a kid. And
that's true. I skipped a step there. Yeah, first official business was in grade 6 at school, and my parents were small business owners as well. They had a garment manufacturing business, and I had a mate at school who was, could draw these amazing pictures, and we got together and we created a T-shirt company, and we were selling it to all the kids in school, and we tried to go out of that. I was pitching the local sports stores and local, at 11 maybe. Yeah. I didn't get any success there. We had more success in the playground than we did in the real world. But, I guess, as Dave said, that comes from growing up with parents of small business.
Yeah, there's a whole podcast here on how you dealt with failure, right? The Colonel Saunders story.
It's actually just my first business was actually at the time I didn't describe it like this. It was a drop shipping business for computer hardware. When I was about year 6 or year 7 as well. I remember actually cold calling the supplier, and I had to put my dad on the phone because I was too young to open up the account. And you learn. I think you sell a few $1,000 worth of stuff, and you just learn everything from establishing a company to how do you find customers to the operations of stock going from one location in a country to another. And I think for me that's just always been in my DNA.
Yeah.
Something that
what was that first business then that you built together?
Well, we had a contract with a telco, and at the time that telco would offer what was called a dealer license. So as a dealer of that telco, you were essentially authorized to sell their suite of products, and it was mainly business products, so mobile phones, fixed line contracts at the time, phone systems when they were a thing. And, again, it was it was really bootstrapping. So Dave and I were running the teams, hiring the staff, but, negotiating agreements with the telcos, doing payroll off at the time spreadsheets and Excel.
Sitting in our, and then the day would finish and we'd sit in our little office that was not really an office. It was like a storeroom type stock room, and all the orders for the day we would literally we had a label printer and we had all the phones stock, and the Australian Air Express guy would come at 6 o'clock and we'd have to get everything out and ready to go for 6 o'clock.
Mobile phones all bagged and tagged and ready to go.
And then we'd start all over again the next day. But we sort of rolled from there, and like one thing sort of led to another, and that industry changed up a little bit. And that business in a very short period of time was very successful. We sort of got to hundreds of thousands of dollars a month in revenue, like in sort of 6 months. It was, we paid our dads back and all that sort of stuff very, very quickly. Yeah. And we were looking at what was next, and we saw this daily deals craze starting around the world. Groupon was going nuts in the US. And we sort of looked at that and went, well, we know a thing or two around sales and distribution. Like, we should have a go at this. And we sort of started unpacking the business model and realized pretty quickly that there was a couple of things that we didn't really know very well. So we didn't really know how to acquire customers online, and that was key to that business model. I had a sort of technical background, but we'd never built software before. So we sort of, we knew we had a gap there, and we sort of shifted our focus to saying, okay, who's doing this in Australia? And it's one of those serendipitous moments where at that very time, there was 3 companies that we knew were sort of in the startup phase, like literally in their first few months. None of them had launched. We cold called one of them, managed to meet the founders, I think the next day. And they basically, over the course of 5 to 7 days, and I still remember walking out of their office the first day and we went, nice we met them, but, too bad it won't work out, because we had our heads set in a different mindset. But in the course of about a week, we'd effectively folded our whole business into theirs. There's a little business called Jump on it at the time, and they had just launched. They were just about to land their first, I think, $5 million investment they'd just been over to Chicago seeing Groupon and Washington, D.C. seeing Living Social, and they managed to get an auction happening between those guys, and Living Social, I think, invested $5 million for a third of the business, and there was a put call over the rest of the business. And so we sort of folded our business in, and we're part of this little team. There was probably, core team of 6 or 8 of us, fresh with funding, with this, great concept that was blowing up around the world. And I think over the course of 12 months, we hired 350 people. We opened 30 or 40 markets around Australia and New Zealand, hyper-local markets around Sydney, 3 verticals. There was travel, products, experience, and just learnt more lessons than we could have ever imagined in such a short, compressed period of time. The guys ended up selling to Living Social for hundreds of millions of dollars. It was one of the early Australian startup success stories, actually. Absolutely amazing time in both of our lives, I think. And kind of coming from that bootstrap world where we'd sort of were before, picking up some new skill, like how to, like, we 3 million customers in an 18-month period in terms of like the online audience, building tech and evolving tech and product, and the email market.
Email marketing was a big thing back then. There's a lot of what we learned back there. While email marketing isn't as strong as it was, there's a lot of disciplines that you learn there that exist today in our business. I think, reflecting back on lessons that you learn, when we looked at that first business, we were in our early 20s, and we only knew how to grow with the money we made. Yeah. The concept of taking on investment, venture capital, et cetera, was not something that we obviously knew about, but not something that we understood. And I guess the other lesson there is it was probably our first pivot, right? And, as Dave said, some things happened. So the telco that we were working with was moving away from the dealer license and going to retail and stores. And so we were offered the opportunity to get into the retail space. And it was that moment as entrepreneurs and as our first business that you go, is it time to pivot? Yeah. Like, are we on the right path here? Do we want to be going down this path? And the answer to that was no.
We very nearly bought a bunch of these stores and business centres down in the Southern Highlands, and
down in Nowra.
Moved our families down there. Sliding doors moment.
So, that as a young, we would have been in our still early 20s then, 24 maybe. And, it's that decision. Do you pivot? Do you stick the course? And that was a big decision. We'd invested a lot of time and effort. We had a big team, we had good relationships with our team and vendors, and, to pack all that in and move it into a completely new different vertical wasn't an easy decision, but with the benefit of hindsight, absolutely the right decision, and helped us on the trajectory that we ultimately ended up in today.
So how did Lendi come about?
Great question.
So we came out of Living Social. The founders exited late 2011, early 2012, and again we had sort of one of those moments where we sort of had the decision to make. Do we stick around now that this is wholly owned by Living Social US, and there was a really good opportunity for us there, or do we kind of take our lessons and move into something else? And we kind of had the luxury of, we sort of spent 2012 really, and we got together with another guy, Marty, who's one of the other founders of Lendi, and the three of us spent 2012 basically looking at, hey, we've got all these interesting skills, we've got very, very big ambitions. Where can we apply them? And we basically built what you'd probably best described as minimally viable businesses. So not a PowerPoint presentation. We actually went, hey, what are these ideas we've got? And we actually built out the actual operating business as a way to sort of test our hypotheses. And I think probably we could do a whole podcast episode on that whole year.
But probably will at some point.
The short story is we had 3 or 4 ideas. One was in the automotive space. And there's actually a bunch of models that have come out since that sort of validated that idea. And we actually built the technology, we built the distribution. We actually had a term sheet from someone to invest in that business. But so there was sort of something there on the automotive space. There was something there on the e-commerce side. And again, similar, we took what we'd learned in Living Social. We took our understanding of product distribution around the world, online distribution of those products, how to find trends and attach yourself to those trends and spin up brands really quickly. And there was a whole model around that. And again, we had some really prominent e-commerce entrepreneurs put a term sheet to us to invest in that business as well. And then there was a few others, but really primarily the other one was what ultimately became Lendi. And we got to sort of late 2012 and it was crystal clear that there was this massive opportunity in home loans. At the time, $300 billion worth of annual transaction volume, $1.5 trillion of outstanding loans. At the time, 13,000 mortgage brokers, but very, very fragmented.
Yeah.
Like the biggest, we talked before about our market share. The biggest market share for a retail brand at the time would have been like 2 or 3%.
Yeah.
So incredibly long tail, and everything was offline. So we kind of came from this world where like in 2009, we were doing at Living Social, we were doing DocuSign contracts with every customer we signed up over the phone, and these deals were happening over the phone. You then moved to the mortgage space, and you got banks wanting fax applications and physical IDs, and we just went. You put these things together. We'd seen the velocity you can drive from a really good digital process, and said, "There's got to be something here." And the traction we got in that business, even though the other ones we literally had term sheets for, we just said we got to go all in on this thing.
Yeah, and there was also just, you have to be passionate about the industry, and the automotive industry is a great industry, but we're at the wholesaling end. So our idea was wholesaling cars, and when we looked at what the mortgage industry was giving our consumers, which is paths to financial freedom, owning your home, it's a great and very rewarding industry. And for me and Dave, big tick in that box, especially when you're committing as a founder to, I don't know, decades worth of, ideally, of blood, sweat and tears. You've got to feel really good about what you're doing, and you've got to love the industry that you're in. And the other industries were exciting and there was a big prize there, but this one just felt like it was a much more rewarding, I guess.
And so was it back to sitting on the boxes of the chairs? Or?
Well, it wasn't far off that. Like we were fortunate to have done quite well out of Living Social, but we saw some upside in the exit, but that was all in script. And again, lesson learned there. Maybe try and take some cash and script. But look, at the time we had personally, 6 to 9 to 12 months worth of money saved up, and we were ready to, mortgages were looking at a pretty healthy condition. But we actually went back to the CEO of the company that we met at, who we'd worked for many years prior. And we had this great pitch deck. We had proved it up. As Dave said, business in a box. We'd started acquiring customers. We got our licenses ourselves. We were bringing on customers and working out how to actually write these loans and what was the process and what was the documentation. So we're starting to get runs on the board, and we jumped on a plane and we flew over to Perth and met him where he lives, and said, we got this great idea and we got this 15-page presentation. And he said, okay, let's, and we went to get the presentation out, and he said, no. He goes, I don't need to see the presentation. I know what we've worked together. I know what you guys capable of. What's the idea? We told him the idea. He said, yep, I'm in. That was our first investment. It was about $1 million. And we thought that we would never have to raise another round again. Well, but we were really, obviously very happy with that. We set up the team in Sydney. We had a very small team. We were over in Fishburners actually when we first started. Little office out the back there, and away we went. Yeah. So it wasn't far off the cardboard boxes, but it was a little bit more comfortable.
But it was actually a really interesting time. Actually, just remembering at Fishburners at the time, the company that was sitting next to us was Airbnb, and across the road was Uber, and it was like almost the cauldron of early stage startup in Australia, because there wasn't anywhere else like the Stone and Chalks. There was no other there wasn't even the concept of co-working spaces in Australia, and it was really interesting from you talked before about the first and last $1 million we'd ever need to raise. We've obviously gone on to raise a whole bunch of capital since then, and from everyone from high net worth to strategics and institutional investors and all that sort of stuff. But in those first few years, it was a really, really nascent industry. And I remember going through in 2014, we raised our sort of first external round, and, we ended up having to find people that understood investing in like mining businesses, like small cap mining businesses on the ASX, and convincing them that investing in a tech startup was kind of similar. Like, you've got this idea and we're going to develop that idea, and then over time it'll reap rewards. And we had to sort of use that mining analogy in a lot of ways to kind of convince people to invest in these businesses, because there just wasn't really the concept of the VC industry didn't really exist. And startups were this thing that happened in Silicon Valley, not in Sydney.
Yeah. So I kind of want to fast forward. I actually remember being given a tour of the Lendi offices around about 2016, when I think you were on Pitt Street. Yeah. And I was really blown away by the energy. And what really has kind of struck me about that nascent period that you talked about, David, was that the businesses that came out of that period, yourselves, Prosper, real entrepreneurial, and what I would say are sales-focused businesses. And I think we kind of lost sight of that when we started to see huge amounts of capital flowing into the fintech space, and you didn't have to convince people that, hey, this is just like mining. What's been your observation as to, I guess, what's the right type of business, right type of approach to be successful here in Oz?
I don't think there's any one right way to do things, but what we can probably reflect on is how we've sort of thought about that over time and how we've also evolved that over time. So if we sort of go back all the way to the start of our business, we almost started at the sales end of the spectrum and kind of evolved the product capabilities over time. And the way we sort of epitomize that or describe that in the business today, we actually call it product-led sales. So we think about our product as being the thing that we build and evolve, and our customers being borrowers, brokers, or banks, and we have different perspectives on what our product looks like for each of those customers. But the product-led sales piece is really the key. So you can have the best product in the world, but if you have no distribution, it actually means nothing. It's worthless. And so we've really tried to make sure that as the business has grown and evolved, we haven't lost that thing that made us so successful when we started and has been there over time. And I think, people have asked us all the time, why couldn't someone come out and build a copy of your platform? The answer is they can, absolutely, with enough time and capital. And, we work in an industry that is got reasonably well understood domain. Like, if you worked in a bank or as a broker, you understand how a mortgage is manufactured and how a credit is processed, etc. But fundamentally, when we think about what's been our secret sauce, it's been actually combining those two things together and building and I think you describe it as like the business architecture that brings the product-led sales together.
Yeah.
So ultimately, you've got to have a great product and experience for your customer, but you've got to have a great experience and sales-led process around that.
Yeah.
To pull the customers in and push them through the process.
Yeah, I mean, we obviously see lots of great ideas, and there's been some people that have built businesses very similar to ours that that aren't here today. And when I look at those, I just think there is a lack of understanding or, I guess, respect for just how tricky that funnel is. Acquiring a customer and managing that from acquisition through to settlement, and then the life cycle of that customer beyond that.
Yeah.
If you asked most people in our business today, certainly in sort of what we call our experience org, which houses technology and product and our distribution businesses, most people would be able to tell you what the conversion was from on-page conversion through to acquisition, through to lodgement, through to first contact, through to assessment, through to unconditional, through to settlement, where the drop-off points are, why they're dropping off there, what we're doing about that, and the obsession about the funnel, but the understanding of what drives that and how we pull customers through that funnel in a way that is in an enhanced experience for them is, I think, what has ultimately helped us get to where we are today.
Yeah, it's funny you mention that, because I remember having conversations with some of the neobanks at the time, and this very thing around cost per acquisition. And their view was, they were talking about cost per acquisition for somebody to download an app. But their business model and what they were basing success on was then home loans. And it's like, well, that's a completely different cost per acquisition to somebody downloading an app. Yeah. And it's strange, right? But you would assume that, or we make assumptions that people going out and starting businesses fundamentally understand what it is that they're building. Yeah. And we've seen this, confusion. A digital bank is not a tech business. A tech business can bootstrap and get a product out and generate revenue within weeks, days now, right? Like a digital bank, you've got to invest $200 million and spend 4 years before you can put
first customer.
And then you look at the credit spectrums they play in, and then you try and find customers that fit that credit spectrum, which is the exact customer everyone else is looking for. And you're playing at the very thin slice of the wedge, and the most expensive end of the spectrum. Yeah. So it becomes really expensive to find customers.
Do you think there's almost a stigma around kind of identifying yourself as a sales business?
Probably. I mean,
I think we've got the right, like if I go back 5 years, I think we were more sales than product. And if I look at today, we are genuinely product-led sales. And we talk about that to the organisation, and hopefully everyone in the business understands what we mean when we say that. I think historically there definitely has been. But again, one-liners are often cliches, but cliches for a reason. I think one of the things one of the guys in our exec team says, if product is king, then distribution is God.
Yeah.
And you can have the best product in the world, but if people aren't using it, it means nothing.
Do you feel you had to earn the right then to become product led rather than being product led in the beginning? You had to be that sales led organization to earn the right to be product led.
It was almost going back to the conversation around the VC world in 2013. We almost had to have the runs on the board. Like the approach we took with capital raising, when we realized that we needed more capital than the first $1 million, and we sort of realized that pretty quickly. When that was a combination of both aspiration and the reality that you sort of start to see when you start to build the business. But the approach we decided to take is we didn't want to be hugely diluted up front and we never took we didn't go and do a big $40 or $50 million round. Like first round was $1 million, second round was $2 million, third round was $5 million, and we did another $4 million. And what we basically did there is we sort of came back every year and went to the same and different groups of investors and said, literally, here's our pitch deck from last year. Here's our 12 months performance. Here's where we went well. Here's the things that we got wrong, but here's what we're shifting and evolving. And we're able to constantly step up our valuation, but also taking small licks of capital along the way in different pools of capital. And I think you can only do that if you've got the runs on the board along the way. Whereas I think, you hear the concept of network effects, and we've definitely got network effects happening in our business, but you can't build a business plan on that because these things happen organically and you don't know what moments they'll happen.
Yeah. So at the time, I want to talk about the investment piece because one of your most notable early investors was Macquarie. And at the time that happened, it was like fintech good, bank bad. What was your, I guess, thinking behind getting Macquarie as an investor?
Yeah, look, that was really interesting. And we actually had a VC fund and Macquarie with almost identical term sheets in terms of quantum, terms, price, et cetera, et cetera. So we genuinely had a side-by-side comparison to make. And the journey we were on at the time was we were trying really, really hard. I sort of mentioned before the old fax machine issue. But this is sort of September. So it's actually almost 9 years ago to the day. It was around September 2014. And we were still really we had really solid traction. If I remember correctly, we were about to hit 100 mil a month of lodgements. For context, we do about 4 billion now, but about to hit about 100 mil a month when Macquarie invested. And we were really struggling to get break. We were growing fast. And by definition, it was 18 months in. And so we were growing incredibly fast, triple-digit percentage growth rates. But we're really struggling to get banks to change their processes to become digital. So to take an application for a home loan across every single bank on our panel, you had to have a wet signature. To submit that loan, you needed to meet the customer in person. So and there's a bunch of other things. We really wanted to break through those glass ceilings. And so the approach with Macquarie was actually two things. It was an investment on one hand, but we also launched a white label product called Click Loans with Macquarie. And Click Loans was really the first digital mortgage, and we really focused on digital from first customer contact to unconditional approval. And we really said, we don't need to digitize everything. Let's try and take the pain points out of the process. And we effectively launched that with Macquarie around the middle. So their investment was, I think, September 14. We launched the product in June 15. And we got that breakthrough growth we wanted. We doubled our efficiency of our brokers. We halved our CAC, all the things we wanted to do. And kind of going back to your question, bringing Macquarie on it wasn't just capital. It was actually helping us drive the thesis we had behind the business forward. Yeah. And it was really that partnership. And they've been an amazing partner since. We've gone through, the relationships evolved well beyond where it was there. And we're now, a very good distribution partner on one hand, and they've been great investors along the way as well. But fundamentally, that decision at the time over, pure capital was, the massive strategic benefit we're going to get.
So I'm going to leapfrog the ANZ partnership and investment and fast forward to CBA and the Aussie merger. Bass, you're the ops guy. How much did your world change in the space of 24 hours?
A lot.
I think he's still getting over it.
Look, Aussie is such a great business. It's a 30-year-old business. And it has, as Dave said, 1,200 incredible brokers who are incredibly deeply rooted into their communities. Huge opportunity, but there was I didn't really have a digital strategy. Now, Aussie isn't really ready for pure digital now, but there are more and more customers that are coming to Aussie, and we've seen this since we've launched the platform into the Aussie world, that are wanting both. So they want to start the journey online and finish in a retail store, start in a store and finish online. So that was the opportunity. But yeah, look, with that came 230 stores that ultimately did things 230 different ways. 500-ish mobile brokers who did things their own way. And some of these brokers have been doing things for 20 years. So the challenge is to find a uniform approach in a way that is trying to preserve the things that are great about Aussie and keep an eye to the future. And it's that sort of triangulation that has been tricky. And admittedly, some things have gone really well and better than expected, and there's others that we've had to take a second or third pass at. But, what I would say is that it's a great group of people who have decades of experience. And what we're trying to work through now is how do we future-proof the next decade for that brand, and how do we ensure that that brand doesn't end up with its own Kodak moment, which I fear it probably would have been on had there not been an eye to the future.
Yeah, and I think, building on some of those points a little bit, when, we had a really interesting 2020, I think like most people, obviously the pandemic was the main theme of the year, but Lendi was actually, and this is all in the media, so unfortunately not a scoop for you on this one, Dex, but like we were very close to an IPO in 2020. We started the year and COVID was clearly a tailwind for us, not a headwind, and our growth accelerated. And, we sort of used to joke a little bit, but it's kind of true. Like our business was built for COVID. We were able to deal with customers all around the country. And when everyone else was like working out what's this digital signature thing? How does that work? And so we had this really interesting year where we, on one hand, were preparing for an IPO, and we literally we had the book basically built. We had, obviously investment banks working with us. We'd gone through the due diligence committees with our board and all that sort of stuff. And at the same time, we're working with CBA on this Aussie opportunity. I think as Bass was saying, Aussie was the original disruptor in the space, 30-year-old brand. It was actually going back to when we started the business, we genuinely had conversations with potential investors and others. They're like, surely you don't want to compete with Aussie home loans. So it was a really, really interesting sort of, again, to use this phrase I used before, sliding doors moment, where we had to kind of look at, do we go and list the Lendi business and all that comes with that? There's positives and negatives, liquidity for our early shareholders, but, being a listed business but the publicity, customer benefit, et cetera, et cetera, et cetera. Or do we kind of take advantage of this opportunity that's ahead of us where we've built this platform that is truly market leading and there's an opportunity to go and retrofit's probably the wrong way to describe it, but take this 30-year-old brand who's got so many things, like has done so many things, best in breed, very, very trusted. I think the thing that really blew us away the most, it wasn't because we had expectations otherwise, we just didn't know what to expect, but the people in the Aussie business have just been absolutely amazing. There are some franchisees that we now call friends, brokers that we now call friends, because they're just, they're in this and they're small business owners, they're entrepreneurs themselves.
So that DNA that we talked about at the beginning of this, your parents, there's a kind of empathy connection there with.
It's uncanny.
Yeah. Well, what the big sort of aha moment was that you've got, in the retail stores, in the franchise side of the business, 230 odd stores, but you've got 230 small business owners that are so motivated to make it work and so aligned in, sort of economic and financial success, and look, they care deeply about their customers. It's a different dynamic and look, all of our people do, right? All of our managers do, but it's just a different dynamic to employing a manager, for want of a better word. And so there's this massive sort of cohort of people that are small business owners within the bigger business, if that makes sense. And that for us was really interesting. And as we're tapping into that and helping support them and helping them, unlock what that next horizon looks like. We've got 230 incredibly invested participants in that journey, physically, mentally invested,
As we thought about, like when we brought the two businesses together, because while it was an acquisition of Aussie Home Loans, we've treated it like a merger of two businesses. And as we've thought about how we bring the two businesses together, not just our team, but also the brokers, we've effectively reimagined and redescribed our culture, everything from the mission to vision, mission, values and principles. And one of those principles, and we have 10 principles, but one is I am because we are. It's the old African proverb Ubuntu. And it's completely embodied in the way the franchisees operate because, we're here. It's not this sort of head office franchisee relationship. It's actually, and Bass talks about this all the time, like if they're successful, we're successful. If they're struggling, we're struggling. And this whole...
It's complete symbiosis.
I've got to say, I've worked with you guys for a few years now. I work with a lot of businesses. I meet a lot of founders. I've been doing this 25 years. And I say this to a lot of people, but Lendi's the best client I've ever worked with, and it's
on the record?
But it's yeah.
I have to go back and listen to the other podcasts.
But it's for that reason, right? Yeah. And it's because we've had challenges, right? Yeah. And how you respond in those challenges and those moments is it's just level, right? There's no shift in the reaction or the emotion. And so those values that you talk about, they're lived from the top down. And there's a saying which is, an organization's culture is driven by the worst behavior the chief exec tolerates. And I see that play out, for good and bad in a lot of organizations.
Yeah. I mean, we like to say at times, the standard you walk by is the standard you accept, right? But if you don't have a framework or you can't point to why that shouldn't be accepted, then that's the problem, where the problem sort of starts. So we have recently, as Dave said, launched, as we've brought the business together, a new set of values and principles. And like anything, they need to be lived and breathed and talked into existence. And these things take time, and they start to, create their own meaning within the business. But at the end of the day, without that, then people don't have that framework to operate within, right? So,
we touched on this a little bit earlier, and I think you talked about, the journey that founders go on. And if you look at Uber's a good example. Founder, 1 minute he's in a bedroom building an app. 5 years later, he's the chief exec of a 40,000 person organization. Regulators around the world gunning for him. His board and his investors want him off, and he's all in the news that he's a bit of a jerk. And I kind of put myself in that situation and think I'd probably be a jerk as well, right? It's just so much for an individual to be able to just absorb and kind of process and assimilate and evolve as a human being and to go through that journey. You haven't quite been on something as large as that, but to go from where you were to 1,000 people and the journey that you've been on this last decade is nonetheless remarkable. How have you kept yourselves so level-headed and retained that kind of DNA and that person that you were, values-wise, principles-wise at the beginning of the journey?
I think Bass was just describing before, kind of actually have to, like when you're a startup, your culture, you can look around and see it over your shoulder. You can, the conversations that happen in the business, you almost hear every single one of them. You're part of every single one of them. And as the business grows, you actually have to get a lot more intentional about it. And I think, we've probably, in particular over the last 2 years, been the most intentional about the culture and taking the things that we're innately and inherently doing and actually trying to codify them is probably a cold word to use when you're talking about culture, but ultimately enshrine them. And we talk about our principles, enshrine them in principles. And actually the act of going through that process actually challenges you. Like when you say X, what do you actually mean? And you actually get a lot more refined. And I've personally found going through that process really both cathartic, but also quite confirmatory in terms of you actually, you start to describe, when we talk about radical transparency, which is one of our principles, what do we mean by that? Is that, the license to be a dickhead, or is that about being open about things and where are the boundaries? And
that's a really good point, actually, because when I've seen, so many people, particularly leaders in my career, and they've used the word passion to kind of almost absolve themselves of, no, your team thinks you're a dickhead.
Yeah.
You think
I'm
you're
just passionate. Yeah. Look, you know, there are certainly times where you need to go and close the door and just take a few deep breaths. Where certainly nobody's perfect, right? And we've all had those moments, and there's been very stressful moments. For me, I think just on the principles, there's a couple that I use. There's one that I use a lot, which is just trusting that people are coming from the right intent. People are not trying to do X, Y, or Z. It's actually good intentions that just haven't manifested in the way that they had hoped. So on the people front, that's one of our principles, a version of, and that really helps me. And then the other thing that I found that I had to learn along the way is making a very intentional investment in what my balance is outside of work. We were very unbalanced in the early days, and I think any founder will tell you that. That's part of probably the recipe for success or what you're signing up for. I mean, early days, we were, as I said before, we were writing loans and working out how to be a broker. We were trying to grow the business. And to make that work, you see customers after hours.
Running our exec meetings on Saturday.
And we ran the exec meetings on Saturday. So we worked 14 hours a day, Monday to Friday, and we did an 8-hour day on a Saturday, or 6 or 7 if we were lucky. And my balance was completely out of whack then, but that was par for the course. Over the years, as we've grown bigger, I've had to really make an effort to find that balance with my family. And this sounds quite clinical as well, but I give everything I have, and I try to work and be a positive leader at home, at the office. I can't then go home and just sit in the couch and absolve myself of all responsibility because I'm exhausted, which is what I would do at times. And I found that actually approaching it with the mindset of I need to be giving my all there as well has actually yielded a massive reciprocation from my family unit, which then in turn makes me happy. And no challenge is harder to overcome, or no friction point in your day is harder to overcome if you've started the day on the wrong foot. You've come out the back of your family unit and it's just not right. And so I've found that by making that investment at home, it's enabled me to be a better leader and a better person in the office.
I actually heard just on that topic, and I won't repeat what Bass said because we've kind of gone through a similar journey, and I've definitely got a much better balance than I had 2 years ago and 3 years ago and 4 years ago. I know my wife still wants me to have a better balance, but we've still got to go on that journey. But I heard something the other day, actually, it's not my original one-liner, but it was, you've got to live well to work hard. And so if you think about like what that means, it's actually about putting your life, if, you know, Maslow hierarchy of needs, and sort of saying, you know, if you get your sleep and you get your exercise and you have your relationships and all the things you need for balance, you get those things right, then you can actually be a great leader, colleague, you know, whatever your role is, and whether you're leading a business or participating in a business, I think that holds true. I think, you know, the next evolution of our culture, we're really sort of trying to help our people go on that journey for themselves, regardless of what role they're on or what role they're in, and really, you know, we're trying to define a very intentional culture, one that really rewards flexibility, but hard work as well. Like it's, you know, it's not about clocking off at 4 o'clock every day. It's about flexing both ways, but giving people the flexibility to kind of build this balance in their life, so that they can, you know, come up and show up at work and be great colleagues and continue to reach new heights.
Have the time to do stuff that's important to them. And what we've found is that ethos around, you know, living well to be able to work hard extends to all of our team, obviously, but we've found that since we've really embraced flex, and that means that family units could do school drop-offs in the morning without having to be on the train at 7:15. You know, can flex in and out of things in and around their lives as they need to, has just yielded a much happier employee, much more productive employee. And I think culturally just sort of this osmosis of respect for the framework.
Yeah. Well, we're coming to a wrap.
Oh.
Yeah. We're running out of time, unfortunately. I could stay here all day. But we're celebrating the first 10 years of Lendi. What does the next 10 years look like?
Oh,
that's a good question. Big 4 for sure. We're 5 at the moment. Look, there's a lot to do. I think we have all of the building blocks for success. We say this a lot, right? But Australians have a history of rewarding monopolies and duopolies, and we typically are comfortable in trusting with one or two variants of, look at property portals, jobs, supermarkets, etc. When you look at mortgage distribution, and particularly third-party distribution, about 70% of every mortgage that is originated in Australia comes from a broker. We have, as Dave said, 6.5 coming up on 7% market share, but then there's this massive long tail of thousands of brokers that own fragments of that market share each. And so the opportunity is really, as we look forward, to actually reduce there's too much choice for choice. A broker is a choice proposition, but you have Aussie, Lendi, you have My Local Broker, you have Mortgage Choice, you have, Smart Line, Rate City, Finder, the list goes on, right? So we think that there's a big opportunity to really put a stake in the ground as that beachhead brand for broking. And when customers are thinking about where do I go for a mortgage, you shouldn't have to Google what's a cheap home loan rate, My Local Broker. You Aussie or Lendi. I think it's a bit crude, but the analogy I like to give is if you used to use Flight Centre to book your holidays, you're probably going into Aussie, and if you use Booking.com or Expedia, you're probably coming to Lendi. And that's all you really need. So.
Yeah, awesome. And Dave, from your side?
Oh, look, and this is, again, sorry for the cliches today, but we're just getting started. When we sort of look at the business today, we have so much. Bass and I spent the last couple of days just looking at what are our big bets for the next couple of quarters, and how can we help the teams coalesce around some of those things. And we start to do, we've got the luxury of having all the domain knowledge of the business, and so we can sort of sit there with a whiteboard and work out size of the prize and all that sort of stuff. We have to prioritize a list of 10 things that could all be worth millions of dollars a month of revenue. That's the opportunity we have is huge. And I think Bass sort of talked about where we want to go. I think it's a good problem to have. We're energized, and I think we've got a great team around us. So looking forward to seeing what this conversation holds in a decade's time.
So Bass, we get fantastic talent listening to this podcast. If anybody's listening to this and they want to find out about careers at Lendi, where do they need to go?
What's your mobile number again? No, look, Lendi Group is the homepage there. We're obviously always looking for great talent. We're very fortunate to have some amazing people working with us now. We view all of our relationships as partnerships with our employees. But look, lendigroup.com.au, and that will house all of the jobs across all of our brands.
Fantastic. Well, amazing work over this last 10 years. It has been a joy to watch this from the sidelines and cheer from the sidelines. And I'm sure the next decade's going to be even bigger.
Thanks for having us.
Yeah, thanks for
having us. You're welcome. Brilliant. As always, folks, you can connect with me on LinkedIn and Twitter. If you're coming back, thanks so much for your support. And if you're new to the show, make sure to give us a follow on your favorite podcast player and leave a review. It really helps me booking great guests like David and Bass. Until the next episode, keep well. Fintech Chatter is produced by Tier 1 people, leaders in fintech executive search. We'll find world-class leadership talent to build world-class fintech ventures. And you can find us at tier1people.com.